Hi everyone, this is Logan Sadler with Ruggieri Financial. We hope you all are staying safe and staying well during this trying time we're all still going through. We thought it was a great time to do one of our educational videos on one of the most current rule changes that has been passed in 2020, the Secure Act. I know we've talked about this in our CARES Act video that we were going to do this, so we're very excited to get this one out there. The CARES Act was passed in 2020 and hasn't quite gotten as much news as we think it should have, due to the fact that it does have some sweeping changes across the board for all investors. Again, it got some news, but not nearly as much as it should have, just because right after it got passed, our whole world's kind of got turned upside down, if you will, there with COVID-19. So circling back, we did want to do the Secure Act. It was a very important act that has, again, sweeping changes for nearly all investors or employers. There were some really good changes that were made and some that weren't so good. So we're going to kind of get into detail here and go over some of the changes that are for employees, retirees, pre-retirees, again, sweeping changes. So we're going to dive in right here. This is a rather lengthy bill, so we did our best to do a cut down version and try to make this here only about 4 or 5 minutes or so to keep it time sensitive for you all. If any of you have any questions on the Secures Act and how it pertains to your situation, please don't hesitate to call us. None of this information is considered an offering or considered investment planning advice. Please call our office for more details on how this could work for your individual situation. So let's jump right in here to small business owners. If you don't already have a group retirement plan for your employees, they're making it easier with some good changes, offering incentives to put in place if you're a small business owner with 100 employees or less. They're offering what is called a pooled plan. You can group together with other companies to have a chance to make it more affordable for some of the small businesses. As well, they have other provisions in place. They are offering tax credits for employers offering retirement savings plans. The tax credit is 50% of the cost to set up the 401k plan, up to a $5,000 tax credit each year for 3 years. So that was a pretty exciting one there for some of these employers that have been wanting to set something up. As well as for the employers' plans, we have part-time employees. Starting in 2024, you will be eligible to join in on your company's 401k plan. To me, that's huge. We have a lot of people that worked part-time for a lot of years and didn't get to jump into those retirement plans. So we're glad they got to do that. It used to be you had to work 1,000 hours each year to be eligible. Starting in 2024, if you've completed at least 500 hours for the last 3 years, consecutive years, you may now enroll in your group retirement plan, which again is huge. We think it's a great option for a lot of you out there that are working part-time and want to start putting some money away in group retirement plans. There are other cases where there are group retirement plans that made some changes. So if you have any questions, if you're an employer, small business, big business, it doesn't matter. If you have any questions on any of that stuff, please give us a call and we can tell you how it may have made things more affordable for you as the employer. Now, some of the bigger changes that really impact a lot of our clients and a lot of the people in retirement are getting planning for retirement. They changed the RMD age. Yes, they did. You can now take your required minimum distribution at age 72. The rule, as you guys knew, was 70 and a half. At 70 and a half, you had to begin taking a percentage of your qualified accounts, IRAs, 401ks, that sort of thing. Now, what a huge advantage. You get to let that sit an additional 2 years. That helps a lot of our clients, a lot of people out there tax-wise. If you're still working, because we know people are working longer, they're working into their 70s and may not need that RMD at 70 and a half. So now they have pushed it to 72. So you get to delay the taxes and have a chance to earn more and put more money away. So we think it was a great thing in our opinion. As well as the RMD is one of the biggest ones. If you're not already taking your RMD, so if you haven't started your RMD yet, obviously it's changing for you if you're not 70 and a half and currently taking it. If you're currently taking your RMD, you're over 70 and a half, you're already taking it, and you're saying, how does this affect me? Everything stays the same for how you're doing it. You continue to take your RMD, nothing changes, okay? As well as contributing to an IRA past age 70 and a half. One of the other changes is you can keep adding to your traditional IRAs or 401ks past age 70 and a half. Like I said, many of our clients are working longer, and what a great opportunity to put away some more money to help stretch that retirement savings. Inherited IRAs. This was a big change, and it's kind of mixed reviews, if you will, on this one. Inherited IRAs. So one of the biggest changes coming for our clients. When your goal was to leave that nest egg to your friends or your family, your kids, your heirs, a lot of our clients, that was their goal, was obviously to leave their spouse some money, and then obviously to have it roll over to the kids. So here's where things really changed. We have done this with hundreds of clients over the past 30 years of us being in business. How it worked was if your spouse passed away, you inherited their IRA. Then you got to take that out over the remainder of your lifetime. And then if something happened to the both of you, it would now go to your kids. Your kids were able to stretch that out for the rest of their life. Multiple kids as well. Can go to anybody you name as the beneficiary, they could stretch that out for the remainder of their life. Well, that was a great thing, and we're sad to say it is gone for right now. The new rule, the new way it works is if you pass away, it goes to your spouse just like normal. That's still all good. Where it really changed was if it goes to your kids. If it goes to your kids or your heirs, how it works is they have to take out that IRA over 10 years, which can in some cases cause a tax liability for your kids depending on their income status and their tax status. In our opinion, it's going to cause a little bit of trouble for some people out there where that was their goal, was to leave money to their kids, and it's a good size estate, and the kids make a decent amount of money. It really can cause some tax strain there. So one of the biggest things you need to do more than ever is get with your advisor or get with us if you're a client of ours and make sure we're kind of structuring it, obviously for what suits you the best. But if one of your main goals was leaving your child or your heirs a IRA, and it's a decent size one, it is kind of now a time where we need to do some extra planning and see if we can't set things up a little bit better tax-wise for your heirs and also yourself. Okay, so that was one of the biggest changes there, in our opinion, was the inherited IRA. We used to call it the stretch IRA, where you can stretch it out for the rest of your life. That has now changed to where your heirs have to take it out over 10 years. Again, this act is a rather lengthy one. We just wanted to highlight some of the big topics that portrayed a lot of our clients. We hope this gave you guys a lot of good in-depth view of what is kind of changing on out there, and we're going to continue to do these videos and bring these to you. Again, if I did the full act, this would be about 2 hours, and I don't think many of you would like to hear me talk for 2 hours, so we'll keep it short and sweet on that. Again, if you're a business owner, individual, any of these things can apply to you and may have changed something. If you have any questions to this act or this video or other videos we've done, please feel free to call us over here at Ruggieri Financial, and we can see how this may impact your individual situation or your business, as we do our best to keep you all informed and educated on what is going on in the investment planning and retirement world. Again, thank you. We hope you guys are all staying safe, and we're trying to do our best as your financial advisors to keep you all informed. Thank you very much, and we'll see you guys soon. Thanks.